All right, guys, welcome to today's awesome meeting. Welcome to today's awesome class, right? So many persons have been asking me some questions on this particular topic I'm about to take right now. Mr. Godwin or G-Wings, what's the difference between this and this other one? Why is this different from the other one? And why must we consider this in the forex market? So what I'm about to talk about now is very, very key and very important. As a matter of fact, as little as this, you can't be profitable without knowing this. So what is it I'm about to share today? Remember, if it's your first time joining this channel, share to your friends, share to them, for them to be joining us on our daily analysis, our daily trades and the rest, for them to be getting the daily signals and the rest. Not only the signals, also on your notification and your subscription. Subscribe is very, very key for you to be able to be and to make it profitable in the forex market. Right, so what are we talking about today? By the time I get to our terminal, by the time I get to our terminal, now this is balance. Now let's say I want to sell the market and I click on sell. Now there is this question, what does balance mean? Or even though we know balance, because balance is very common, how is it different from the equity? And how is the equity different from the margin? And how is the margin different from the free margin? These questions have been coming up, and coming up. So what are we going to do? What are we going to do in this particular situation where we have the balance, the equity, the free margin, and the margin? And in our day-to-day trading, what are the things we have to consider, and what are the things we got to consider in the forex market, right? So let's quickly go to our let's get to our slide. Now, before I get to this equity, I would like to share with us the balance, because that's the most important thing. Now, the balance is the funded amount you have in your account. The balance is the funded amount you have in your account, the funded amount you have in your account. Let's say when you created your life account, you funded it with a $1,000 account, $2,000, $3,000, $4,000, let's say $20,000. Any amount you funded, that is your balance. Your broker will fund it in your trading account, it will be there. So that is the balance, and that is what you find here. That's what you find here. So this is the balance. Whatever you fund in your account, whatever you put in your account, any amount you see in your account or put in your account, that is your balance. And this your balance doesn't change. This your balance doesn't change. It doesn't change except you make profit. When you make profit, it's gonna move higher or go higher or increase. But when you make losses, it's gonna decrease. So, but ordinarily, it doesn't change. Then aside from the balance, there is another one, equity. Now people find it difficult to differentiate between the balance and the equity. How is the balance different from the equity? Now when you don't place any trade, the difference is not usually there. When you don't place any trade, the difference is not usually there. The equity equals the balance at the state of rest. That is when you don't place any trade. Let me take you through what I mean. When you get to your this, look at the trade we just placed right now, though it's entering profit. So I'm going to exit it right now for me to show us what I mean. So this is it. I'm exiting the trade right now. You can see balance and equity are not the same thing here. But by the time we exit this trade, you can see exiting it in a profit, right? So you can see the balance is equals the equity. The balance equals the equity. So we have 9911 here as the balance, the equity same here, 9911 as equity. The free margin too, 9911. Nothing changes. The balance equals the equity at the state of rest. When you don't place any trade, the balance equals both equity and the free margin at the state of rest when you do not place any trade. Now, when you now place a trade, let's say you click a sell, or you go in for a sell in the market. So when you place a trade right now, what happens? You can see the balance is now different from what you have from the equity. What do I mean? Let me define it again. Equity, this is simply the total value of traders, the total value of traders account with the running trade in watch. This is simply the total value of a trader's account with the running trade in watch. With the running trade in watch, not only the total value of your of the trader's account, but with the running trade in watch. So what does it mean? By the time we get to our trader account or our account, this is the balance. Now the equity. Now the equity is putting your profit or your loss into consideration. Your equity is now putting your profit or your loss into consideration. Now your equity here is your total balance subtracting the loss if you are already in loss, or your total balance plus your profit if you're already in profit. I come again. Your equity is your total capital plus your profit if you're already in profit, just as this trade we just enter right now, or your equity or your total balance minus your loss if you are in loss. So that's what equity simply means. Forget about all the English, forget about everything. Equity is your total balance, which is what we find here, your total balance plus your profit if you're already in profit, or the total balance minus your loss if you're already in loss in the market. I hope we get it. So that's what equity, that's where the difference comes in between your equity and your balance in the market. So that's it. So we head to the next thing, to the margin. Now what is this margin? The margin is the amount given to hold a particular trade by your broker based on your lot size. If you go getting a thing or go getting anything from any shop, or let's say they give you money, you have a contract to get a particular stuff, they ask you how much is needed totally to hold this particular contract you need. The contract you are about to embark on, the amount needed to hold that particular contract is known as margin in the forex market. So how is it? How is it? Now, when you get to your this particular place, and this margin is dependent on your lot size. This margin is dependent on your lot size. The margin is dependent on your lot size. The higher the lot size, the higher the margin, right? So you can see I placed a trade with a one standard lot, a standard lot, one standard lot, and what is the margin? The margin is $216. $216. You can see the higher the lot size, the higher the margin. You don't expect someone who is trading with a margin of 0.05 who is trading with a lot size of 0.05 to have the same margin with someone who is trading the market with a standard lot size. There are two different things. So the higher the lot size, the higher the margin. The higher the lot size, the higher the margin. Another good thing about this margin is this: the higher the leverage, the lesser the margin. That's the benefit of leverage in this situation. You can see the day we talked about leverage is very, very important. The higher the lot size, the higher the margin. But the higher the leverage, the lesser the margin. If I'm using a leverage of 1:800 or 1:900, I will have the same margin with someone who is using a leverage of 1:200 or 1:100 or 1:300. The higher the leverage, the lesser the margin. That's the advantage of using higher leverages. But the disadvantage of using higher leverages is that when the market goes against you, you're going to make losses. It's like it will be easier for you to blow your account. But when you're using a higher leverage and a higher lot size, higher leverage is a call for a lesser margin in the forex market. I hope you are getting this. So it's very, very important for we to know this and also share to our friends for them to see this. So that's it. Then the free margin we also see there. So what's the free margin? This is the difference between the equity and the margin. The difference between the equity and the margin, you have your free margin. The difference between the equity and the margin, the difference between the equity and the margin, you have the free margin. Subtract the margin from the equity, you have your free margin. You can see both the equity and the free margin, they are moving continuously. Both the equity and the free margin, they are moving continuously. So subtract the margin from the equity. Yes, subtract the margin from the equity, you have your what? Free margin. So that's what free margin simply means. Subtract the equity from your margin, you have your free margin. So this is very, very important. It's as simple as that, and it's very, very important in the forex market. As a way of recap, this is what we try to do today. We brought to our notice the difference between the balance, equity, free margin, and the margin. As little as that, so many persons still finds it difficult. Why is it? What is the difference between the margin and the free margin and the balance and the equity? Yes. So this is the difference. We established that at a state of rest, let's say I see this right now, at a state of rest, the balance equals the equity and the equity equals the free margin at the state of rest. But immediately you take a trade, let's say you click for a sell in the market, the balance becomes a different thing totally, and the equity becomes a different thing. Now, what is the equity? Equity is the total balance in your account putting the running trade in watch. Equity is the total balance in your account putting the running trades in watch. So what is the total balance? Look at the total balance here, 9850, 9850. That's the total balance, which is the balance you funded in your live trading account. Now your equity in this particular time is your balance putting the running trade in watch. What does it mean? Here is your balance subtracting your running trades if you are in loss, your balance subtracting the running trades if you are in loss. That will give you what? Equity. Then it's also your balance plus the running trades if you are already in profit. That gives you what? Equity in the forex market. Then we also went ahead to talk about the margin. I defined it here. And what did we say the margin is? The margin is the amount given to hold a particular trade by your broker based on your lot size. I gave an instance. If you are going to going for a project or anything or for a contract, they ask you how much is the amount to hold this contract. That is where your margin comes in. That amount given to you to hold that particular contract, that is what is called margin. And we went ahead to say the margin is dependent on your lot size. The higher the lot size, the higher the margin. The lesser the lot size, the lesser the margin. But the higher the leverage, the lesser the margin. And the lesser the leverage, the higher the margin. I come again. The higher the leverage, the lesser the margin. The lesser the leverage, the higher the margin. So you can see the benefit and the disadvantages of leverages in the forex market. Not only that, we talked about the free margin. We talked about the free margin. So what is the free margin? This is the difference between the equity and the margin. This is the difference between the equity and the margin. This is the difference between the equity and the margin. Subtract the equity or just subtract the margin from the equity, you will have your what? Your free margin. Subtract the margin from your equity, you're going to have your free margin. Remember to send your questions to the comment section, your questions below the video, and I will make sure I take your question from any part of the world. I'll make sure I take your question. It's very, very important. So as a trader, you have to consider margin. Very, very important. You have to look at your margin and your margin level when placing a trade. Your margin and your margin level. It has to do with your volume, which has to do with your lot size. Your lot size, not only your lot size, and also your leverage. You enjoyed this video, do well. So make your friends to be aware of it so that they will be able to enjoy other videos coming in. All right, bye now. Go enjoy your profits. Go enjoy your profit.